Hi everyone, welcome back to Blue Team channel. Remember, one of the leading factors for the failure of many businesses is lack of planning. If you want to be successful in life and business, you need to have a proper plan for how to obtain that success. Trading is no different from any other business. Hence today, I'll be sharing with you step by step on how to create a proper trading plan. A trading plan is more like a GPS which will enable you to get from wherever you are now, maybe you are still not profitable, to where you want to be, which is being consistently profitable. Always remember that trading plan is a work in progress. The forex market is not static, it's dynamic and it consistently changing, which simply means that as things change, your trading plan should also change. So you must always keep on working on your trading plan. You cannot just write it and leave it, be like, I'm gonna check it some other time. No, you have to keep on coming back to your trading plan and change what is no longer working for you. A trading plan should include what is supposed to be done, why, when, and how. It covers your expectations, risk management rules, your personality as a trader, and your trading system. The very first thing to do before you create a trading plan is to do self-reflection, as you are the one who will be using the trading plan. So you shouldn't copy any other person, you should do it yourself. But self-reflection is very important. But remember that with trading plan, you must always be specific. Be like, I want to grow my account to this certain amount. Be like, I want to double my account in this certain period. You can say, in the next 2 weeks I want to double my account, in the next 3 weeks I want to see my account triple, but you must just try to be specific. Now let's go and look at on my trading plan. Then I'm going to explain each and every factor so that you can also be able to create your own trading plan, not copy mine. So now let's get to it. First factor to include in your trading plan is the type of market you will be trading. It can be currency, bonds, future, stocks, option, and etc. depending on the backtesting you've made. After specifying the type of market you'll be trading, you have to go deeper. More like if you say currency, you have to specify which currency pairs you'll be trading. Remember, you don't just pick the pairs randomly. You choose the pairs that 90% of the time, let's say 80 to 90% of the time, respect your trading system. You will only have the statistics if you have backtested your strategy thoroughly. So it means you have to backtest your strategy and see where it works properly, because it cannot work on all the pairs. Sometimes it does work on the pairs, but most of the time there are certain pairs that it will work more percentage, more like 90%. Then choose those pairs. So for me here, the type of markets that I'm having, I do currency, I do stocks and indices. So the reason I do stocks is because I'm more like on indices. So for currency, my top 10 is GBP USD, GBP NZD, USD CAD, Euro AUD, GBP CHF, Euro JPY, Euro USD, USD CHF, AUD JPY, and GBP JPY. Those are the main thing that every time when I analyze, I start with them. So if I see most opportunities on them, then I'm gonna trade. I'm no longer gonna analyze other pairs. But if there's no opportunities, then I will go to others. But the other one, I didn't write it down. So for stocks, I check Amazon, Tesla, and Apple. So the reason for this is because they also give me an idea where some of the indices that I'm trading are going. So for indices, I have Nasdaq, SPX 500, and US 300, US 30. So if you check, I'm only focused on US stocks and US indices. So it's more like it's less job for me, because the stocks give me the direction of the Nasdaq and US 30 and XP. So I just check top stocks where they go in, then they guide me. So that is the type of market I'm touching. So you have to specify the type of market you'll be trading, but you don't just wake up and select the type of market you're gonna trade. You take this, you get this from the back testing of your strategy. If it is working properly, then you pick the pairs that respect your trading system well. Another thing is that you must specify the days on which your trading system works properly alongside the type of market you're trading. Obviously, after specifying the days, you must write down the time frame that you will be using on each market. Sometimes you can even go deeper and include the trading session that you're going to trade. You can even write down the time you plan to learn the market and the time you will always use to find the trading opportunity. So it will depend on what you want to include there. You don't have to include everything that I've said, but those are some of the things that you have to include. So let me just explain mine here. For me, perfect days and best time frame for me, Tuesday to Thursday are the best days to trade for me. So for currency, I swing, and most of you guys who have been following me, you guys know that for currencies I swing. So I do 4 hour to daily, but in indices I do day trade, which is most of the time I look on the 15-minute to 1 hour chart for an entry. Remember, this is based on the strategy. So for an entry I look on 15 minutes and H1 time frame. So for stocks I do position trading, so it can be daily or weekly or even monthly, depending on how I feel. So on currency there you can see it's 4 hour to daily, and in indices it's 15 minutes to H1. But all those things works better for me between Tuesday and Thursday. Tuesday, Wednesday, Thursday, those are the days that I like to trade more. I didn't include whereby I will learn market and all those things, but you can include them. They will help you. So now let's get to the condition of the market you should be trading. So now I'm gonna just read mine. Trade only trending market. So this is for me, specifically for me. Trade only trending market. This means that based on the back testing, my strategy works better when the market is trending. When the market is ranging, I observe, look for a perfect entry before a breakout. So I will observe and look for an entry upon a breakout, before a breakout. So my strategy, I can be able to spot an entry before an actual breakout. Do not open a position because of fundamental. Wait for a fundamental to come to your technical entry level, then take a position in respect to fundamental. So this is more like I'm explaining my strategies on how it works. But obviously, when we talk about the condition of the market you'll be trading, you want to include those kind of the things. So just make sure that you explain what you'll be doing in details, in deeper details. So try by all means to be specific and to write down everything that you will need when you're trading. When it comes to risk management, you should include the percentage to risk per trade, how much you can lose in a day before stopping, how much is your daily target. Just try by all means to be specific and follow it, because it will protect you. But always make sure that your risk management rules will always protect your account from blowing during drawdown period, because you cannot say your strategy will always win, you're going to win for the whole of the year. It doesn't work like that. So there are certain days or week whereby you'll be in your losing streak. So just make sure that whatever risk percentage you choose is going to protect your account during that period, because it's something that you can never predict when your strategies will be losing. So try by all means that your risk management is proper. So for me here, for currency, risk 3% of the account on each trade and target more than 3%. Obviously that is the rule. You have to risk less. I mean you have to risk less, yes, but the amount you're risking, you must be willing to get more on that trade. So that is the rule. So on indices, I risk 5% because you guys know indices are fast. So I try to risk 5% of the account on each trade and target more than 5%. Obviously, stocks, like I said, I'm a swinger, so I just risk 10% and let it run for a month or even 2 or so. So yeah, that is the risk management for me. So it means on currency I risk 30% of the account on each trade. So let's say I open GBP USD, I open standard lot. On that standard lot, maybe I have 10 positions. I have 10 0.1, which equates to standard lot. So it means all of them combined, it's 30% of the account, the risk ratio. So that's how I risk. I hope I made myself clear. So on indices, let's say I have Nasdaq. So when I have Nasdaq, the last factor on my trading plan, I have an entry strategy. So on my entry strategy, obviously I use pullback. I have to specify the strategy I will be using for pullback. So I have used ABC strategy, MA zones, technical analysis to determine the possible pullback value, breakout, use moving average, zones, technical analysis. Before you enter trade, make sure you do so using a tested strategy always. So guys, that is not all that you can include. So I tried to make myself as simple as possible, so you can just include any other thing that will help you in your plan. So like I said, it's more like a GPS. So anything that you will need to help you get to the top, just include it there and follow it daily. Follow your trading plan daily, because it's something that is going to help you to minimize the losses. You should also remember that the main purpose of trading plan is to keep you disciplined and to help you trade in an effective and efficient manner to make good trading decisions. It helps you to prevent many psychological problems from taking place when you trade. So you'll find that sometimes you don't know when to close. Either you should close a trade because it's losing or because it's winning. Like, it helps you to prevent those psychological problems, like emotions, including those things. It helps you to prevent those kind of things. You must always remember that results are usually proportional to the quality of the trading plan. So the more time you invest on your trading plan and making it proper, the better the result you're gonna get. So try by all means to take your time when you create your trading plan. And like I said, you must always keep on coming back and fix some other things. If you strictly follow your trading plan, it is more likely to limit your losses and your trading mistakes. So try by all means to be positive and follow it. Do not trade without it. And the last thing that I can leave you with, something that I can tell you, is that never ever trade without a trading plan. Like, we know that if you fail to plan, you have already planned to fail. So try by all means to start with the greater foundation, which is a trading plan. Start with a trading plan. Don't just jump into analysis and all those things. Trading plan is very important for you. So let's get to it, guys. Thanks for watching until this time, and don't forget to subscribe for more valuable content. Until we meet again.